And good morning. It is the 8th of November, 2024. Been quite a rodeo this week. I would say not to my liking necessarily, but definitely some interesting. I suppose there were some people that probably made their year trading at election night, 200 and something points. You can see that right here. Well, I don't know what that's about. You can see that right over here. And up, and yesterday as well. So, yeah, go figure. Anyway, the purpose of this journal is, Jesus, let me start over. The purpose of this stream is my virtual journal. The idea here is that I narrate so that I am able to go back and review this at any point in time and understand what I was thinking. Obviously, I can know what I was seeing by the video. So this is by no means financial advice. I am not any kind of a official financial anything. As trading is extremely risky. You'll probably lose all your money. Better off watching cartoons. But if you insist and want to follow this, remember that it is my journal. What I say is for my benefit, and the trades I take are my decisions. This is, and just as a function of YouTube, in case you're not aware, there's a delay built in. Nothing to do about it from my side, but there is a built-in delay. So if it's almost impossible for you or for anyone to take my trades or to copy my trades, because by the time it's pushed to YouTube, the move has happened. So that's something to really be aware of, The times on my channel here are all Central Standard Time. Anything that you see on my charts or clock down there in the bottom or whatever, or what I say is Central Standard Time. The purpose of the stream to YouTube is that I'm able to, first of all, it's for accountability and transparency, and also so that I can review the streams at any point in history, now or in the future, and do so from any device. I don't have to be standing here in my office with my trading screens. Bookmap has a very, very well-developed recording and playback facility. They record, as long as you turn it on, it records every tick in the market, any trade, anything you do. And when you replay it, unless you happen to notice the big progress bar that's across the top, which is, there for a reason, so people don't try to lie and say, "Oh, this is my live trade." Unless you don't notice that, or don't see down here in the bottom where it says, instead of real trading, it says simulated or something like, or replay or something like that, you can't tell the difference between this live action and the recorded one. The problem with it is, and it would be a hell of a lot simpler. I wouldn't need to deal with this stream and all this kind of stuff really, but YouTube. But the point is, or the problem with that is, there's no audio. So that leaves out the what I was thinking piece, which is probably the most important, I guess. So that's that. Let's go on to numbers and reports. Today there's several, Michigan being one of them. They're only 2-star, they're not 3, so they don't have as high an impact on the markets, and they also are coming out around 9, which is not very typical. Most of the time the numbers come out around 7:30, like non-farm and those places, those kinds of numbers, but today it's all 9 o'clock. So that's it for that. The pre-market. All right. Well, there's our open. Traded up higher and then flattened out, pulled back, and now we're back up more or less to the above VWAP and towards the POC, above the overnight VPOC, and getting near the close. Yesterday's RTH close. This is IRT, which is my charting stuff, or normal kind of charting. This is yesterday's RTH period. You'll notice that this is full session. It starts at 1700 and trades through 1600. So this is yesterday's RTH period. And this is our current ETH, or overnight. You can see that here we traded right up to the highs, close on the highs. And we lost one of my mice. There it is. And we held out until, of course, the 2 o'clock, when the London clever boys come on, and they thought they'd get some shorts or some longs asleep, and then, make some money on it. I guess is what that really refers to. This is the NQ, or the NASDAQ, and this is the micro composite chart, which is these are just daily RTH bars, 830 to 1600. And wherever the price overlaps, I draw a volume profile around it, which by extension, or default actually, shows a micro composite, or the volume point of control. Why evaluate a high and low and, range. Then obviously there's the high of the micro composite and the low of the micro composite. Now, these red and green lines are high and low volume nodes. They push automatically to bookmap. None of the other stuff does. I enter manually the POC, the micro composite high, low, etc. And you'll notice this huge gap followed in hot pursuit by another gap yesterday. And now we're trading about the middle of, or to the upper end of yesterday's range. And we've got a gap, and then we've got a gap, and, and I'll be the first to suggest that the market goes up to go down and goes down to go up. So, and if you've ever heard the term blow off top, you might want to Google that. And this is the market profile chart. So over here on the ES, it's not just because I have it visually represented here on the ES, are the price levels from within IRT. And these price levels are all pushed to bookmap. Now, and you'll notice that there's no indicators on any of my charts. The closest thing I have to an indicator is the VWAP, which is calculated, but the rest of them are just price levels. This green is the IB high and low, which is high and low of the first 1 hour of the RTH. The mid, the price levels, previous RTH high, straight up, and there's no indicators. So we come back to the book map and how these columns work. This column is the high time frame column, where I enter manually the all-time high, which is also the high of yesterday's range, and there is no micro composite yet because there's really no overlapping price. Then there are the other levels that I enter manually. Maybe we can see some here, like there's the gap low and some other stuff. This column is the volume area, or the volume nodes pushed directly from IRT to bookmap. Because we're way up here in the middle of outer space, they're not coming across because we're not in a micro composite, so they're not turned on. I mean, they are, but the micro composite that they represent is way below us. This is the full session volume profile. This started plotting at 1700 last night and will continue through 1600 today. So it's real important to understand this is the full session. This is not the ETH, which is from 1700 last night until 8:30 this morning. So that's a big difference. This will continue to plot throughout the day. This is the RTH session, which will reset at 8:30 this morning. This is a delta column for RTH, and this is the chart volume profile, which just plots what data you see in the chart. Now it jumps to, and now it's real small, and then it's real big. That's all there is to it. I'm not sure it's worth anything, to be frank with you. This column is where I put my notes and the statistics and the statistics which are associated with the various price levels, and I'll get into that in a minute. But this is strictly a column where I manually enter everything. And the first thing I do is the title, which yesterday was higher out of range. This title represents the opening type. There are only 4. I'll describe them when we're looking at the statistics. But the first thing I do, because we're likely to open now lower in range, I change that column title. And why do I do that? 2 years from now, I can go back and look at a screen snap of this or of this stream, and I will know instantly what the open type was and how it configures, and how trade or the day progresses in relationship to the opening type. That also the open type also affects the statistics related to these individual price levels. Again, these are the individual price levels. Pretty straightforward. This is the RTH close, the football. This is settlement. This is the overnight volume point of control. This is the previous RTH, if I can get a volume point of control. All right. Now, what does that mean? That means that yesterday, and I've got this in the wrong spot. That means this is the POC where we closed yesterday's RTH period. So I always clear these columns between sessions, and I put this naked volume point of control flag in because that represents the volume point of control for the most recent RTH auction. Obviously, it is naked. It hasn't been traded over yet because we're not into that was from yesterday's RTH, and today's RTH hasn't started yet. So that's why it's the naked volume point of control. This is mid and, blah, blah, blah. The lines I referred to here, this is the POC. This is the POC for the darker yellow or more muted yellow is the POC for the full session. This is the POC for the RTH session. POCs are nothing spectacular or mystical. They are simply the price at which the most contracts have traded so far in the session. That means that at 6,003, the most contracts have traded so far in the full session, 4,226. The very second that this price at 2001 trades 4,227, this yellow line is going to move down there. That's all there is to it. It just shows you the price that the most contracts have traded or did trade so far in that session. And that's all there is to it. The VWAP, of course, is the volume weighted average price, and it is calculated. The mid is pretty simple. This is the RTH mid. It's the only one I plot. The overnight or the IB high and low, also not mysterious. It's an acronym from the market profile days for initial balance, but really all they are the high and the low of the first 1 hour of the RTH session. That's it. Another thing to note here is the developing value area low opposed to the value area low. Developing value area low is that for the current auctioning session. The value area low is for the previous RTH session. And high, same story. No indicators on either chart. These, the heat map indicates resting liquidity. So this higher liquidity that you can see up here with this darkened or lighter, more intense coloring represents 139, 140 contracts, and that's all there is to it. One of the things that's kind of handy about this heat map is you can see exactly when that resting liquidity came into the market, where it started right there. So at 5:12 this morning, Central Standard Time, somebody put this big order in over here, and it could be going, it could be stacking and pulling, but so far that's a high enough resting liquidity to register differently on the heat map depending on how you have it set up. So that's that. What else have I got to think about here? Yes, the statistics. So the statistics are very simple. Again, there's nothing mysterious about any of this. It's just math, statistics, probability, period. The statistics are gathered this way. This is the study. As I said earlier, there's only 4 open types. Higher out of range, higher in range, lower in range, lower out of range. So that's gap up, gap down, either side of the close, but within the previous RTH period's range. Today, we're looking to open lower in range because this is yesterday's range. This is yesterday's close. Here's where we're trading. We're trading lower than yesterday's close, lower, and we're trading within yesterday's range, lower in range. It's just that simple. Now, the study takes those 2 parameters and then calculates the percentage or the number of days, which, ends up being a percentage, can be calculated that way. That price in this open type, price revisited each one of these levels in the upcoming or in the RTH period trading session. So typically the most common is the overnight volume point of control. And that was revisited out of, let me start over here. Sorry, or let me go back a minute. This looks back at 2002 days. So of these 2002 days, 598 of them, we opened lower in range. Of these 598, price came back and revisited the overnight point of control 508 days, 84.9% of the time. Boop. Volume point of control, overnight volume point of control, 84.9. Whoops, what happened there? There we go. 84.9. That's how hard it is, and that's all there is to it. This is not a hard line in the sand. It simply shows you the percentage of time or the probability that this price will be touched or revisited, whatever you want to say, however you want to say it, by price in the upcoming RTH period. And I will do the same for the rest of them. The mid, which is typically another biggie, is 83.9. So we'll plop that over here. All right. Let's look at the overnight close, which is going to be right here under this. There you are. The overnight close, or I'm sorry, the overnight low. 67.2% of the time. And that's all there is to it. The overnight high, maybe we can go up there and look at that. The overnight high is 51.5. Notice what's happening. When it's lower in range or higher in range, it's much more of a 50-50 deal. The only 2 real outliers are typically always the overnight volume point of control and followed in hot pursuit by the overnight mid. Then we have the previous highs and lows and the overnight highs and lows. They have statistics similar to the IB statistic. I'll talk about that in a little while. Previous high. Well, the previous close is 73.4. I guess we can slap that in there. Previous high is 38.1% of the time. Very, very slight. Doesn't mean we're not going to go straight up there at the open, but I'm just putting in these statistics, these percentages. That's all I'm doing. And you see that previous RTH low is way in the hell down here. Because of such a huge range yesterday, and they continued this euphoric, what was it, Greenspan used to call it? Irrational exuberance. I guess that's Ivy League for frickin' nuts. I guess, I don't know. So here we are. All right, now that'll do for now, statistics-wise. And we're at 8:21, which is when I do my TLab snap at 8:20. And what that is, let me do that because I don't multitask well. Talking and typing is a big issue. I put this snap out every day at 8:20 to the TLab. What is the TLab? Well, the TLab, come on, let me get you here. Okay, there we go. The TLab, I left this, I can shut this off so you don't see it, but I put this snap out every day. The idea is folks who don't have this kind of a charting package, they can have all of the levels that they could ever dream to look at and a relationship of how we traded the last few days, just to kind of help and to kind of reduce. In the early days, it used to be like 10,000 people asking, what was the POC? What's the POC? What was the POC? What's the POC? You know, so I thought, well, man, maybe if there's just one thing where everybody can refer to it and know what the hell those numbers are, might be a good idea. So that's why I did that. Now we'll get back to what, in fact, is the Traders Lab. The Traders Lab is a Bookmap Discord chat room. Two very important things to know. It's absolutely free, and you do not need to have a subscription to Bookmap. You got to join the Bookmap Discord server like every place else, right? Just, you to make sure you're not some idiot or bot or whatever else. But it is completely free. Now, within that, there are several different chat rooms and presenters and whatever else that go on throughout the day. But this one is called the Traders Lab, and it is by a guy named Tom B. B like Bravo. Who knows his last name? He's from New York. Maybe it's Bernstein. I don't know. Who the hell knows? Could be Brown. Anyway, he's a professional trader, very successful, and has been trading his own account, day trading his own account like we are for 45 years. And for me, the criteria is, there are two criteria. Number one, I agree with and I understand what he says and teaches with regard to trading as a business, not a video game, how to approach that, risk management, controlling your psychological, hide, he calls it, that's hide coming out to play, FOMO, all those kind of things. But probably the most important criteria for me is there's absolutely nothing for sale. None of this bullshit internet guru, buy my indicator, that's available on my website. Pay me $1 million a minute to mentor you and you'll be profitable, all that. And I cannot say that for all of the other people on the book, even within the Bookmap Discord area. There's a lot of presenters and stuff, and I've never listened to all of them, absolutely. But the couple that I have listened to were typical internet bullshit. Like this third word out of their mouth was that indicator's on my website, and this one guy wants $975 a month to mentor you, and he'll guarantee that you're profitable at the end of a year. Stop and think about that, 12 grand. But you have to follow every specific rule and thing he says to the letter, or then the guarantee's off. And it's like, what are you, seemed like it was really disappointing to me. So I only recommend Tom B. and the Traders Lab. Also, the group there are very focused on trading. It's not a bunch of kids playing stuff. I mean, they could all be kids. How the hell do I know? But you know what I mean? It's a serious place. People are talking about trading. They're talking about statistics, things like that. So I definitely recommend it. And that's the end of the Traders Lab story. The next thing I need to do here is set up the be able to trade. And that happens like this. I trade with a risk neutral. First, I use multi-brackets. And I have a couple of different packages. This is a 2-lot risk neutral package. Both contracts have a 12-tick stop. The first runner is a positive 12 ticks. That means that the moment this first scale is achieved or target is achieved, the trade is risk neutral, meaning the worst thing you can possibly do is scratch, unless you're a moron and you move your stop away from entry. This is the runner at 48 ticks. So with Bookmap now, what you have to do, you've selected that, you have to activate the trade control panel. And in my case, I initiate all my trades with a keyboard, not a mouse. So I select DOM only rather than chart or both. And the reason I do that is if you select chart or both, this area right here, which they call the live data column, you'll notice how it's just showing price up and down. It's not showing any of the volume dots or any of that bubbles or any of that kind of stuff. This is the live data column. And if you click anywhere in here, if you've selected chart or both, and you click anywhere in here, you've either entered an order or a trade. And that means, and I've done that before, trying to manipulate a target, or like move a target a little further away, and I got on the wrong side of this line and tried to grab it, and I was in another trade. Didn't want to be. So what I do is, as I said, I initiate trades with the keyboard, and I manipulate orders and stops with the DOM, which is right here. And there's no way I'm going to accidentally get over here and do something. Confirm that your package is the correct amount of contracts that you. And then I turn this off because I don't want to have my P&L showing. Now we're going to open here in a couple of minutes. When we do, I will start to flag and track the migrating VPOC, which I'll show you here in a minute. And I do that because, remember, the POC is just the price where the most contracts have traded. So it moves up and down. And eventually it'll scroll. This yellow line will continue to plot, but it'll scroll off the left of the screen. So my goal is to be able to see all the data that I need and want right in front of my face here on the hard right edge, without scrolling back and forth and in and out and up and down and all that stuff. And so we're going to open here in a couple of seconds, and there we go. I think that's pretty much covers the, I'll talk about my risk range to do with my trade plan. It's real simple. In order for an entry to be valid, I have to have an unobstructed path to my first risk neutral scale. That means there can be no lines, levels, or high liquidity sitting between my proposed entry and my scale. Not my targets, but my scale. The first scale is my target, but it doesn't have to be. For example, if I was trying to target the POC here, or the mid, or the VWAP, I couldn't do it from here because all these lines are in the way, even though it is 3 points. Hope that's clear. And once we hit 8:30, this will reset. There we go. Now will come RTH, and I'll start migrating the POC, or flagging the migrating POCs. And there we go. And here we are. Ooh, damn thing jumps around so fast. Boom. This is the flag that I use for the migrating VPOC. And you'll see those bounce around. Now, this is actually the wrong one. But we'll move it up here. It was there for a minute. One of the things that you'll notice is that in the beginning of the market, because the volumes are so light, it takes very little volume, to move this POC, right? So it's pretty volatile at the opening stages of the market. And what have we got now? We got a opening drive, looks like. And here's another one. And there's another one. Popped up there, popped back down here, opening drive. Typically, I would expect that there would be some profit taking after all of this tomfoolery over here. And people wake up and realize that maybe the outcome of the election wasn't what they were expecting, or maybe there's questions now. I don't know. Who knows? Not to be political, but because it doesn't do any good. So there we go. You see how many times the POC has shifted since we opened? And we've been open for 7 minutes. And up we go. Well, so what have we done? We've got the overnight high statistic laying right up here. And that's got a pretty high probability. We have not taken the overnight VPOC or the overnight mid, which would suggest to me that we're probably going to have a counter rotation at some point in this day. What the hell is this? Okay. The value area high from yesterday, which I think doesn't mean much, but I would say we're going to take that. There's that stat. Come on. There's I don't know what it is. The overnight high and low have a 90-something% statistic that they're going to be taken out in the trading day. There we go. So there's that statistic taken. And there comes that 38% previous RTH high. And a lot of people are trying to pick a top up here. You can bet your bottom dollar on that. And to be honest with you, I was thinking about that also. I was thinking about, well, this thing has got to turn around and rotate down a little bit. Not very often, I should say, infrequently do we have a gap and go or just an opening drive that never pulls back. People got to take profit at some point. And here they're going to come back down now and do that. So taking that short at 12 would have been a nice, so far would be nice. And I would suspect that we're going to get down here to our targets of the VPOC and perhaps the mid. Just makes sense, right? All right. So what are we going to do? I'm going to take a bio break here. So that wasn't much of a pullback, was it? And I don't know exactly. Well, I'm not going to do anything. I'm going to watch this and let the dust clear a little bit. We have a double high up here, a double top, right below that previous RTH high. Now, there could be an argument that there would be a lot of fuel living up there, because anybody that was trying to pick tops yesterday was trying to short it and got up here, got their stops living above the high. That's typical retail behavior. Whether that's going to pan out for them or not, it's another story. But what I'm going to try to do here is just watch until I understand what I think is the thinking on the part of the market participants, and then anticipate. The idea of trading as a business is that it is a statistical business of probability, with probabilities, and it's not a video game or gambling. So you should have, away from the market, live market days or hours, you should calculate and identify and calculate a setup that's got a statistical probability or edge or expectancy, whatever word you want to use. And I'll talk about that in depth later, but this first few minutes of the open here is fun to watch. Now I've got to turn off that. I can have just the application or the monitor, and when I have the monitor, then I'm getting all these screen snaps like that. Somebody was questioning the statistic around, well, that's actually something to look at, maybe. Somebody was questioning the statistics in the TLab because I posted that the previous statistic of the previous high was 38.1, and they were arguing with me. And what they were doing was confusing that with this one. The overnight high or low is 94%. The previous high or low is somewhere around here, right here, is 81%. That doesn't mean, that's the key word in all of these multiple statistics is or, and it can really trip up some people. I mean, good for them. And we're going to probably take it out for the looks of it. But it is not the statistic. What? Yeah, so anyway. Here we continue the irrational exuberance of a bunch of traders. Take that any way you want. And so, as someone pointed out, it is actually the open type is actually higher in range because we jumped up above the close a couple of ticks, 2 points, 1 point, no, half a point, point and a half, whatever. Here is the open. Well, where the hell is the open? That's a good question. I was looking at the open down here, which is below close. That's a good question, actually. No, I'm right. Open is 475. Boy, I wish I'd have left that that old. Yeah, never mind. I have a funny little overnight game I play with a TopStep account, a combine, and that Top X or whatever they call it. I just look at what the market did yesterday. Look at where it opens on the ETH. Put a trade on. Forget about it. Go to bed. This morning I was up. It had drawn way down, but this morning it was up. Didn't hit the stop. And this morning it was way up. And that's with a micro. So, the big movement was like $14 or something like that. So quite a bit of market movement here, and I didn't engage at all. Anyway. Typically, I mean, the context is up some more. It's just irritating. And I can't believe, that looks like grenadines. Krabi, Thailand, been there. I like the, I don't know, whatever they call it, where they pop up different pictures of different places. I've had the good fortune to live in a lot of different countries. And I know Krabi, Thailand very well. And there's the first VPOC migration in a good long while. And not by far, but, you know, keeping in accordance with the plan. So now what are we going to do? I'm at a loss here. I would have typically been thinking about shorting because that's it with me. But, you know, these days, look at this shit. So what do we got here? We've got basically 58.23. And our low up here is 59.25. So roughly let's round it off to 80 points. And this one is roughly, say, 70 to 78. So say 90 points of gap below us. More or less 90 points of gap below us. So they've tested her down, and now they're going to bring her back up some more. It's a, I don't understand this kind of irrational behavior. You know, there is no real economic reason that we're doing this that I know of. Well, we're approaching the IB statistic set. So in other words, what's happening here is that at 9:30, wrong screen. At 9:30, another 10 minutes or whatever, another 5 minutes or so, the IB statistic will be set because the first hour is over, and the IB high and low again are just the high and low of the first 1 hour of the RTH trading session. There is this really high, very well known, very closely watched statistic that in all open types, either the IB high or the IB low is exceeded in the remaining RTH period. And it's like 97+% in all open types. The key word is or. You would expect that it will be the IB high. Very often we'll trade up here like this around this time of day and go take out the IB low. That's absolutely not unheard of. Now, I don't have a statistic, but, stand here long enough and watch this stuff, you see it. And don't forget that we're still in it is not set yet. It doesn't set till over here at 9:30. So they could still run this up. The IB high will migrate up. And that's what they're going to do now, it looks like. And this brings me to a statistic that has been developed by a guy in the Traders Lab named Rod, who says that he did some statistics and determined that the high or low of the first 30 minutes has a high probability of being exceeded by the high or low of the second 30 minutes. Kind of makes sense if you think about it a minute. But anyway, so the TLab now refers to that as, and I do sometimes also, refers to that as the IB30. In other words, the higher low of the first 30 minutes is exceeded by the higher low or low of the second 30 minutes. And then the old-fashioned IB statistic is referred to as the IB60, which we're getting ready to make. Now we're coming up to 9:25, so we'll have 5 minutes here before the IB. And then at 9:30, this IB high ceases to move, and that's when that statistic would come into play. Just FYI. After the IB has been set, the IB60, whatever you want to call it, then there are some structured trades which need to be on the front of your mind, and that is the IB continuation or the IB failure. And they are just as they sound. Will we come up to after 9:30? Now remember, this all happens after 9:30. Will price break the IB high, since this is where we are, and continue on up? Or will it come up here, break the IB high, pull back, not get any buyers, and fail and revert back to the mean or lower? Typically, maybe easier to explain over here, typically in a balanced rotational market like this is so far today, the IB failure would be likely and would be valid because it's a rotational day. IB failure is essentially a mean reversion, right? Whereas an IB continuation is typically more expected in a trending type environment. So let's see what we get. IBF or C, what'll it be? And there you see we had an IB30. Just a couple of minutes before the 3 minutes, 2.5 minutes before before the IB sets. Now this, notice how the line is up here and the flag remains down here. That's not a bug or a problem. It's expected because it's a issue in Bookmap. The IRT chart, both of these are driven on the same data from IRT, which is instantaneous. However, the smallest refresh time I'm able to set on the Cloud Notes column in Bookmap is 1 minute on this flag. The guys who built this indicator, which is something that I bought from Bookmap, have it set much lower. You notice how it just jumped up there? So now it's about 30 seconds apart, I think. But I don't even care anymore. I know what the deal is, and it's nothing to worry about, and it's not a bug or a problem or anything else. It's just a simple matter of what the refresh rates allowed by Bookmap on the column as opposed to the indicator. That's all. So in case you see that, there's nothing wrong. And if you look over here, everything's the same, right? And I hope that all this is just streaming along. The stream is flowing swimmingly. It looks like it is. We're an hour and 30 in. There we go. Now the IB statistic is set. This will not move. And the IB statistic, which is, like I said, over 97% in all open types, is on the table. One would imagine, considering it's two points to this IB statistic, that that's the one we're going to take. But that absolutely isn't a fact. And given the rotational manner of the day and where we are in, nosebleed country, I would tend to lean on an IB failure. And what are they going to do? Unfortunately, well, not really. I was going to say, unfortunately, the context is up. It is kind of, but we are pretty much rotational in both NQ and ES. Now that is the statistic taken. I'm about half tempted to throw a short on here. Well, the idea is that once it breaks over like that, it should pull back, come back up here to test, and if it can't get legs, then the short would be valid. So this is where the test would be. And that's 199 out, 19 out, stop-wise. And here you have the inherent dilemma of a mean reversion situation where you, and I very definitely don't want to pick a top or try to pick tops or bottoms, but the whole concept of mean reversion is trading outside in. And that's the whole premise of the IB failure. So, yeah, it's a toughie. Nobody said this was easy. Sorry about that. I always forget that bumping the table or moving my water bottle sounds like a thunderstorm coming through here. I've got to get that gate figured out at some point. And I would say, at this point, there's the scale for my IB failure and my IBF trade, which I suggested. These could be triggers here where it could not get back above the IB. And if so, you got short here and you're scaled here. And that would have had the range requirement because it was ahead of this first obstacle. Got to remember that. Yeah. So we'll see how this works. Now it's kind of dicey. We've traded down. We haven't obviously traded to the mean, which is here. And they keep trying to bounce it back up off the developing value area high. For me, the trigger and the ideal situation would have been here, but I was called out several times for suggesting such a thing. So I'm always, lately I've been too prone to paralysis by analysis. And the way around that is internally accepting, emotionally accepting that the nature of the market is random and that the outcome of the very next trade is 50-50. I think I have embraced that, but still I find myself, and where I get bogged down is getting further into the weeds. Well, I know that the outcome is 50-50, but I want to try to skew that edge as much as I can in my favor to at least get to my risk neutral scale. Here would have done that. I wouldn't be profitable now, but my scale, it would have been a good asymmetric trade location because I would have been right here, and where would my stop have been? Above it and above this liquidity, which is kind of scary because this is where a bunch of stops are, a lot of fuel. Okay? But it would have been asymmetric in that the risk was asymmetrically proportional to the reward. So one or two, if you wanted to close your stops way down to like 1 or 2 ticks, you could actually do that. And then your scale would reduce because the risk neutral scale and the stop need to be the same, identical, so that the first scale, the risk neutral scale or the first profit target, buys the ride for the second contract. And that's how that whole concept works. So this would have been an asymmetrical trade, and it would have been a good entry location. This is getting a bit worrisome for me because I keep trading up here. But they're not getting any sellers coming in to take this any lower down to the mean reversion. So that makes it a little bit nerve-wracking for me. And there is a whole bunch of fuel right up here. I think the lost opportunity was over here so far. Well, we got 13 out. This iceberg keeps absorbing. This selling iceberg keeps absorbing. I don't know whether I can hear that stuff in the background or not. My wife making bread. And I wonder why I'm fat. Oh, so here we are. Let's see now. Now it becomes much more of a concern to me because we are building a fractal up here. We're building a consolidation. And we have all of this fuel right up here. All of the retail guys and everybody that thinks it's a really good idea to short, to pick the top. I've got their stops living right up here where we see 214 contracts. So that paralyzes me because what I guess what I would like to see is a straight up through and take them out, go no place and come back under the IB. Then that would be encouraging to me to take that IB failure, which would be the mean reversion back to here. I just think that I'm a little hard pressed to believe that this, I don't know how long how much crack is there in the world they can keep dumping in the water cooler for these guys, and once they realize that what has happened may well work out to be a real disaster financially, Now, having said that, I guess it's probably apropos to discuss the fact that trading is a zero-sum game. We're business. What does that mean? That means that in futures trading, I should have said that futures trading, I apologize, is a zero-sum game. Equities, stocks, is not. There is a float of stocks. Apple has a float of stocks. I don't know how many million it is. And within that float, you can buy or sell those stocks. You can't sell them or short them unless you own them already. If you don't own them, you have to borrow them and you pay an interest rate to do that. Now we've taken out that liquidity I was talking about. 626 contracts went out right there. If they come back up and don't go anyplace, this then lends itself to that IB failure. But back to the zero-sum game. In futures, every time somebody buys, someone is on the other side selling, or the other way around. So think for a moment about all of this. All of this buying has a counterparty which has been selling all this way up. Typically, in the futures market, the deeper pockets, the higher time frame, are the people who are passively selling to all the exuberant, irrational retail. And how does that, or how do those sellers profit? They profit by taking the price lower and taking the stops from all the people that bought long. And if you don't think that I'm right, or you don't think that's the way, look at this. Goes down, goes up to go down, goes down to go up. What happened over here? Let me do this. It might be easier. Goes up to go down, goes up to go down, goes up to go down, goes up to go down. And now this crap. My opinion is that they're going to drop the hammer on these guys at one point, wherever that is. I mean, that it's inevitable that there is because the only way that all of these people who have been selling to all of these longs can take a profit is to bring the price down. It's not a prediction, it's a fact. It's a market fact. So we'll see what happens. And there's, you know, there was a 200-point move. This was like 200 points election night. You know, that's a hell of a lot of money. I just couldn't bring myself to trade that, but you know, that can make your year. Same exact emotion and position that I had while trading 911. The clever market people shorted the country, and I couldn't do that. So it continues. My scale would have been taken out now for a scratch, but I just find it really hard to think of that, actually. I would have found it I did find it really hard to think that we were going to not mean revert here and that we were going to continue up and continue up higher. You know, that's... and where are we going? This liquidity here, 200. This liquidity appeared 541. What the hell do I know? I got no clue. Yeah, so I'm wishing that I could figure out a way to monetize rearview mirror trading. Well, actually, I know how to do that. It's what all the internet people do. 90% of them can't trade their way out of a wet sack, I don't think. But they don't trade live or call trades or have any accountability. They put up a video or whatever, and I guess that's how you do it. I don't know. Obviously, because obviously in the real world, or at least this real world or this reality, you can't go back in time, and that's what rearview mirror trading is. Well, I saw us test here. We had a VPOC migration higher. We traded down to this old VPOC. I got long, and I've been riding this all the way up. Yeah, that's a great idea, and that would have been the thing to do. But I didn't see that on the hard right edge at that time. I was still looking for what they're going to do around the IB, because don't forget this IB at that time was right down here. Well, it was right here. No, I'm sorry. It was right up here, because this is where that was the high and then back down again. But, that's rearview mirror trading. Tell me what you're going to do. Tell me where the market's going to go right now. This is the hard right edge. Where's the market going to go now? Do you go long? Is it going to continue this IB high? They've tested back to the IB now. 1, 2, kind of 3, 4, 5 times. Is it going to continue up for a new high? Or are they going to break down through it? That's the flip of the coin. That's the 50-50 that you have to be comfortable and okay with losing. Now, from my concept of asymmetric trades, along from down here is more or less that, because you can have a very tight stop and hopefully who knows how high it can go, right? My other mind always comes in and goes, yeah, but there's all this fuel just below the IB high now. Because all these guys that are thinking, oh, we're going to go to the moon, Alice, they're all popping their stops right down along the bottom of this IB high. And the rest of them are down here. And we still have the developing value area high and the mid and the previous high and the mean reversion, or the VPOC down here. So, which is it? That is the $64,000 question. Which is it? Assuming that I had gone long at these pull downs to the IB, what is that? I never get that good. So say you're at 19, say you can get in a 19 quarter, means you're really hot. 20, 21, well, you're not scaled yet. And it's kind of dicey because scale is pretty much looking at a breakout for any kind of profit. Now, there is a lot of liquidity living up here. There is 697 contracts parked out up here, so that's a pretty heavy line. And you see how this liquidity works in the heat map? That's kind of neat, huh? Now would be a terrible time. I don't know that I've talked about it today or not, but in my world, a breakout is FOMO, and it's considered, I flagged that trade as an error. That's error-BO, ER-BO, breakout. And I realized that breakout trading is a valid strategy, and people make a lot of money doing that. It's kind of a version of momentum, I guess. Richard Dennis, the Turtles is probably the most famous bunch that did it, and they made like $105 million in, I don't know, 3 years or some stupid shit, but they had unlimited funds to trade, right? And that's the key. Anyway, for me, it's a breakout. It's a FOMO because I'm thinking, okay, it's going to go. It's a momentum trade. And, thinking back to that asymmetric trade location, if you're looking at a breakout up here and you short and you go long, where's your stop going to be? Right in the middle of all this traffic and below this level where everybody's been putting their stops and yada, yada, yada. So for me, it's an error, and I try to stay away from it. Sometimes, the other day, whatever day the hell it was, Monday or Tuesday maybe, I just fell apart emotionally or, went on tilt or some goddamn thing. Took 3 stops, which is a really, for me, that's a real, in a row, boom, boom, boom. And that's, I guess it was just a brain fart or, a lapse of, I don't know what. But anyway, that was and the reason I share that here is because it was essentially doing this shit, doing breakouts, trying to do breakout stuff, letting myself succumb to that FOMO. And then, later that night, not participating in the in this 200-point run over here. Pretty disappointing. The next day, I did take one normal trade for about 37 handles. Points, ticks, not handles. There's 9, I guess it would be 9 handles. And you see what happened now below there? Not a lot of stops, kind of surprising. Only 122, an iceberg. But they were still able to absorb that buying. Or the other way around, the iceberg, I guess, was able to absorb the selling. And now we've got another one, and we're taking 110 stops out now. And I think we're probably going to do a mean reversion one of these minutes. But I don't have any kind of real vetted trade that supports that. I just think that it's Friday, and I can tell you what would happen if I was sitting on a giant bunch of profit from a bunch of longs. I would be taking that profit, or at least some of it. All right, so let's think about this now. The developing value area high seems to be a quite a formidable point often. In this case, 17 to 18.5, it was not a valid, if I stick to my range requirement, it wasn't a valid entry. Anything above the IB high, which does have plenty of range, is borderline FOMO and borderline of having your stops in the middle of the mess, right? Certainly not the dictionary definition of asymmetrical trade location. So they can't get much above 22 here. We've still got all this liquidity living up here at 25. Not to mention there's several other layers of stuff, but so what are we doing? 19 to 24, 25. That's 6 handle, right? 5. That's not exactly a big trade. So, yeah, I don't like these times when it's stuck between the devil and the deep blue sea here, right? You know that the longer this consolidation goes on, right here, the more stops are up here from everybody thinking they're going to go short. And the day is now moving away from rotational to a directional day. We've got this consolidation, higher high, higher low, consolidation, higher high, higher low, consolidation, higher high, higher low, consolidation. That's stair-stepping crap. Hit it. But that's what it's looking like now. So now the context is up, and taking shorts would not be a good idea. So the long off this developing value area high would make sense, and it's from 17 to 22, so we're up there around the 6 handle range. And the range requirement, I guess you could squint your eyes and say that, well, this was we tested back to the IB high and we didn't get anywhere, so you go long, and this was the trigger to go long, and there is the range requirement. And if you're looking at 18 to 17 quarter, that's your stop's still below this swing low, so that's could in fact be justified. Now, however, straight up breakout. So no thanks. I'm not sure why breakout or momentum trading seems so attractive or enticing or whatever. I mean, I know all the logical stuff. I've repeated it just now several times about asymmetric trade location and all that kind of stuff, but there's something feels good about it. I don't know what it is. I guess maybe it's a positive outlook and, oh, this is going to go. I don't know what it is. I guess it's FOMO. So that's why I call it that. And that's why I make every effort to consciously not do it. I don't know if I mentioned this, but if anybody listens to this and tries to trade like I do by initiating trades with a keyboard, you have to be really sure, if you've got more than one monitor, of course, that your focus is back on the bookmap application. Otherwise, the keyboard doesn't work. I do that by clicking up here at the white, just the top of the screen. But like if I'm looking at IRT or something else on OBS or whatever else, I have to make sure that I've got focus. Obviously, if you trade with a mouse, no problem, because by the sheer fact of clicking the mouse on the screen in the application, you will have returned that focus. But more than once, I've been looking at something else and looked over at the movement was there that I wanted, and I hit the keyboard and nada, pinata. This is going to be something here that's not pretty to watch, I think. I would love to think that it's going to take this to the top. Again, it's a breakout. Now, down here around 21-ish, maybe. What I'm thinking is they're going to come back down towards the IB high, and then they may take it off if they're going to continue up. And the context is, and I'm getting away from the mic again. The context is, let's see if that made a difference. That's at 220 when it was about 219 when I wasn't thinking about that. Anyway, so at about continually, we are stair-stepping up. So context is moving higher, and then as a result, shorts are essentially off my table. And this could have been the likely location here at around 21 for an entry. But look what we're trading, And now, if you're long from down here, and you're scaled, and then this is a great spot to be. But this is not, in my opinion, this is not a great spot to be entering. Why? Again, for the umpteenth million time, asymmetrical trade rotation, and look where look where your stop would be, right in the middle of all this mess. Levels, mess. 22, 19, right there. Not good. And it's irritating because if it takes off and, if it breaks out, well, then you're all busy cussing yourself because you should have been on that. But the time to have gotten on that was down here. Look at some bigger picture stuff now. Look at this consolidation, man. This is amazing. Here's the POC, right? So it's 9,700 contracts. We've got to trade another 3,000 contracts to get POC to migrate up. I don't know. I have no idea whether that's the thinking or the... First, I don't know who would want that to happen. Why would they want that to happen? Other than those guys that have been doing all the selling for these last 3 days, when all these folks have been buying like crazy. That's probably who. Get them as long as you can get them, and then jerk the rug out from under them on Monday and Tuesday. And this is a real tempting spot. This is where FOMO can really get you. Something I should also say about that, you never get over the emotional stuff, the FOMO, all those things, fear of losing, all that stuff. Even though intellectually you understand that it's a random market and the outcome of the next trade is 50-50, and you try to skew the edge. First of all, you try to identify a setup and criteria that have a positive edge when you capture enough occurrences of that in history, back tests, in other words, and then you trade that. But still, you still always have those emotions and the FOMO and all of that stuff. It's part of our lizard brain. You just have to recognize them, and you can't get rid of them. And I guess you sort of control them. But I like to think of it, and I do pretty good, except the other day. I like to think of it as I recognize them and I don't react to it. And that could be part of the problem why I'm, a bit suffering from a bit of analysis paralysis lately. And now it's going to break up and take out those stops in that liquidity, or take out all that liquidity, and I'm going to be disappointed with myself for not being on it. Right? That's how that works. And guys that are long from down here are tickled pink. So are we going to get the pop here now? Is that what's going to happen? I have no idea. And I'm not quick enough to catch these kind of V drops like this, you know, nor am I even sure that I would want to be quick enough. But I mean, obviously, if you took any of these lows across here, you're feeling all proud of yourself. Now, you're still not even scaled. You're only at 2 points. But down here, yeah. So I'll have to analyze why this was a spot I should have been looking to get long at some point over the weekend when I review. Now they're going to just continually slow grind this thing up to 25, which is always magical. I'm going to try to have a little bit of more gap here on the mic. It's we're 233. Well, let's make it a round number. 234 in. I'm going to try to get the mic away from my face to about a fist length. About a fist, and we'll see how that works. Gives me good visibility of the deck, the keyboards, the monitors. And all I have to do is not bob and weave a lot. I got so used to doing this for the last year or two with the headset on. It's kind of convenient because obviously the mic proximity of the mic to my mouth would never change, and I could, bend over, pet the cat, walk around, do whatever. And now we'll see if we're getting proper volume and stuff like that out of this. Yeah, so we're about right here. And yeah. Yeah, baby, yeah. I'm thinking that we're pulling back to that 22. Now, is this going to be an area for a long? That's the big question. And of course, the minute I give up being disciplined and just throw a long on down here around 21, it'll just fall out of bed, go straight back to the mean. That's when I'll be on the wrong side of that 50-50. There's a guy that I've bumped into on YouTube. It's pretty funny. He's his name is Nick Sean, I think. Does some pretty funny stuff. He's a Forex trader, and I just his voice puts me to sleep. So that's how and he had some pretty interesting things. He's got a concept where he uses dollar cost averaging, which is something you got to be real careful with. I guess maybe it works in Forex, but his philosophy is if you take enough occurrences, you're going to be 50-50. You're going to have a 50% win rate, which is more than most retail traders. And that's correct. But you got to have a lot of occurrences in order to have that payout. If you flip a coin enough times, it will be 50-50. But what's enough times? 10,000. So with Forex, which I traded once long ago, but I don't know much about it anymore. I guess you can have his theory is that he takes a small amount of money, in his opinion, $20,000 or something, and he starts an account. And then he just enters the market randomly whenever. In some of his videos, he actually uses a random number generator on the internet. And if it says 1, he goes long. If it says 2, he goes short, no matter what. Then if it goes against him to the next significant level, he'll enter again the same amount, same size. Sometimes that'll happen 2 or 3 times, or 4. His theory is that eventually that market, especially the markets he trades, which I don't know much. I mean, I know the pairs he's talking about, but it's been years and years since I looked at them, will mean revert. And so in his opinion, the dollar cost averaging will pay out. And what he uses is the alternative is you blow up the account. And essentially what he's doing is using the small amount of money with which he funded the account, and the account, that is his stop. By all definitions, a very hard stop. That's his stop, and you certainly can't change it. So it's interesting to watch. It's kind of funny sometimes. And sometimes, I don't know, who knows? I'm sure there's a way he could figure out how to cook it up or do something to it, but it's just entertaining for me. So I, give the devil's dues. Nick Sean, I think is it. All right. And here we come back to that IB high. So I will be on guard thinking about a long position. No shorts because of the context today. Up, higher lows, higher highs. Much as I disagree with the reason that the market is being so exuberant, the fact is it is. And so what you do is make money on it. Now, while I'm busy talking and not trading, I should have been looking at a long position down here at 20. I still think we'll come down and test that IB high and remember that this is the developing value area high. And we could mean revert also. Looks to me like we're giving some serious thought to coming back to earth here to test the developing value area high and the IB high. I'm looking at something here on the IRT. I was gonna post it. So these gold lines are what the levels it would take to be balanced. So we've traded up here to the top. We would need to pull back to 96.25 to balance the market. Oh, well, I didn't take my IB developing value area high long test down there. Busy looking at what I was thinking about this balanced market idea. That's irritating. He who hesitates is lost. That's got darn disappointing. And this is a great spot for FOMO to jump on you. Need to stay focused on the important parts. I was looking at that balance area from some stuff that they were talking about on TLab and missed this right here. One of the things about having vetted trades where you know your edge and you rely on the law of large numbers to manifest is that you anticipate the setup. You know the setup is coming, you know the triggers are coming, and you anticipate it. It's not a surprise. Real irritating. And just darned irritating. Especially when I was standing here talking about it. And I think I'm my own worst enemy sometimes. Yeah, that's just irritating. It's important to remember that this developing value area high is moving, right? It's developing. So a minute ago when I was looking for a test of it down around the IB high, it was actually down here. I mean, I'm not making excuses because I just had my head up my ass and was looking at this balance area stuff and missed it. Well, they're fooling with it now, and I don't know what to think about it, to be honest. I wonder what turning these gains up or down will do. I don't know the difference between OBS and this mixer. But while I'm standing here watching this market go back and forth, I'll mess with them. I wonder what that does now. If that's going to put the OBS, well, it seems to add some gain on the mic. Maybe that's a good thing. I don't know. Yeah, well, the point is to trade, not be a radio guy. Easy for me to get in rabbit holes here, I think. But I want it to be pleasing for me to listen to, and clear and concise and that stuff. So here we are at the developing value area high again, this test. We've taken out 25, which we had not done before. And I'm a little bit leery now that we might look at this IB low. It's also the time of day. It's 11:05. They've played with it and gotten a lot of people off center. Yeah, here we go. This test up to 25, where they took out 155 contracts there, that's a little bit disconcerting. Sellers seem to have the ball. Doesn't look to me like there's anybody with, I don't see any green, I don't see any green dots of consequence here. These dots, by the way, are delta. So this means they would reflect what's going on over here. There we are at that IB high. We've got this microstructure right here with this low volume node that's choking them off. And then we'd have to get around the top and look for new highs again for any progress on the long side. Obviously, the short at 25, if you're, a psychic wizard, and you can pick those tops, that was a great short. Well, 6 points. Better than no points, I guess, isn't it? A lot of selling down here. I would expect mean reversion, but I have to be careful because I am always looking for shorts. That's my go-to trade. I hope it's not because I have a negative attitude. It's just usually because I've noticed they jump out the window down and take the stairs up. Is this where they're going to start taking profit now? Who the hell knows? Pretty definitely I don't. Nobody does, actually. You're clueless. The idea is to anticipate what you think. The context has been up. I should be looking for longs. This IB test was a good one. We had 263 out. We come down here for 8. And an iceberg comes in. But now what's happening? We can't get across developing value area high and go up. So should I just put on a trade, which would be asymmetrical? Yeah, that's a big question. I don't know. What I see by price action here is that it's not conducive to a long, even though that's the context of the day. That low volume node at 21.5 is seems to be a pretty sticky. Another thing to point out once again, this IB trade doesn't qualify my risk range. This does. Oops, what the hell is that all about? This does, but it's not as ideal a trade location because my stop would definitely be under the IV. So it would essentially be asymmetric, but, down here's a hell of a lot better, right? 18 to 20, you already got 2 points baked in. Damn near got to your scale. Yeah, sure. Okay. So here we go for the mean reversion. The IB failure, the IB, schmibby, bybie, dibby, what? I don't really know. My fingers are twitching here for a long at this IB test, but I'm just so leery of this rally because it's just based on nothing. Unfortunately, Tom's just telling us war stories from the past. Well, while he's busy telling war stories, we had this IB continuation trade, and now he loops back and goes, well, this is a structured trade, so this would have been a trade to take. That's kind of the stuff that irritates me about anybody that does a lot of rear view mirror stuff. And now, this would not be a trade for me because, yes, we have gone basically 3 points to a scale, but we would be asymmetric, and this would be more or less of a breakout to the top again. So that's irritating. That's what I get for listening to that. I don't generally listen to that anymore. I review it at night when I'm not in the market or worried about it. And I was watching this, and he had the live market. You know, he had gotten to the live market, but was staying away, whether it was intentional or whatever, staying away from talking about it. And when you say this is a trade down here when the market's up here, that I don't think that does anybody much good. And certainly not me anyway. Disappointing. Disappointing. Made a couple of changes to the EQ on the bass, 329, 323.29 in actually. And we'll see if that makes any difference here. Just to kind of add a little more bottom end to it without being muddy. Huh, well, I'm not hearing anything now. So maybe I broke it completely. I don't know. That seemed to be a big, pretty high bump. That compressor didn't do very good. Got clear into the red there. That's not a good thing. Oh, they got the VPOC to migrate, and then bam, everybody went crazy. Well, I'm glad I was eating. I'll tell you, it's amazing. I think what you got to do in order to really be on this game all the time is just turn off everything, people and everything, and just be absolutely 160% focused. So this VPOC migration was a real classic move up. And what did we have here? We had 20 to 27. So yeah. So now I wonder what this does. So another change at 413 on the EQ band, third band. So 1, 2, 3, buckle my shoe. I've got to see what's going on here and how long this takes to update. This is also something that's pretty crazy. It's 1538 or 1540. Okay. See how long it takes this thing to come on. Yeah, so that's going to be the final thing I do for that with that for a while. Brought the bass down and the treble back up a little bit from where I had it. It's taken about 1 minute and 15 seconds for this delay. Seems like that's a long time. But anyway, I'm going to not worry about it at this point, and I don't know what to do with this noontime market. It's obviously a big consolidation right here. The Renko is just chopping around. Basically, basically a consolidation period. What can I say? The problem I have is I missed this retest of the IB continuation, which was really stupid because I was waiting for it. I can't take shorts today because this context is up. So best I can do here is just stand here. It's like a bump on a frickin' log. Irritating. And you would imagine that at one point in time here before too long, all of these tops that are being tested and all these stops that are laying up here in this liquidity, 177, 235, 392. So 1220. The market is. I'm frustrating myself more than the market is frustrating me. I mean, the overall market in the context of the country is irritating it to me. But we'll see how this little change sounds, and then we'll go for a walk. So this, for all intents and purposes, seems like a blow off top. And, the thing about it is it can keep going up until they think they have enough morons in there long, and then they're going to just slaughter them. So that's what's going to happen. There was a big volume pop. Is that going to be it? Who the hell knows? Picking the top is tough. What's going to happen here? Missed that 40. That's irritating. That would have been a scale. I'm going to try to See if this gets some follow through into the world famous power hour. Late, unfortunately. Late. So I got short right here. Put my stop just above, but not far enough, and I got to get through this area right here. And we'll see what happens. So darn irritating that I didn't take that when I first tried to queue it up here. So irritating. Now I need to pull the stop down here, which I did to break even. The reason this was one tick above is I moved up one tick to get above this high volume area right here. And I'm glad I did that from the looks of it. And now the trade is risk neutral, and the worst I can do is scratch, plus a tick for commissions or whatever. And if I wanted to be extra paranoid, I could bring it up here, and then I would have that, whatever that amount of money is there, that number of ticks, 11 ticks, which is 80 something. I mean, $140 or whatever. And we'll see if we continue to make some headway here. So we're entering power hour here in in 5 minutes. I will probably bring the stop up to break even here, just to protect what little profit there is in this, and not to succumb to any gyrations here with power hour, etc. Except, and I guess I can accept the scratch and hell with it. We'll see. Typically, I always move the stop one tick or something inside of break even. That's what this green line means. Just to cover commissions, but I don't usually ever trail up to here until we get well into profit, and then I'll trail up to like this scale or in here someplace, but not before we get past at least the initial risk neutral scale. Something's going to happen here. They're coiling up like crazy. Whether it's going to go up or down, that's another issue. If it's a blow off top, if it's 2 o'clock, if it's Friday afternoon, I would expect they got a lot of people long in this market. I would expect it to have some correction and some profit taking, but you never know. I mean, really, ever know. Now, this trade goes kind of in the face of most of my usual philosophy, which is not to counter trend trade. But this is a blow off top, a very specific and unusual situation. It's Friday afternoon. We've just come in getting over this eventful week, depending on how you look at it. And so I saw a lot of volume hit in here at the top of this. And that looked to me like we could be setting up for the blow off. So I wanted to be positioned short. As it stands now, I'm risk neutral. So, Merry Christmas. The worst that I can do is scratch. You can't imagine how that makes you feel psychologically. Obviously, I'd like to see it go down and make a whole bunch of money, but you never know. A mean reversion would be great. They're going to take it down to about 22. That'd be super. We get under this micro structure here, we've got a long way to go get down to this low volume node. And once we get substantially away from price action here, I mean this, these entry and scale, I'll start doing some trade management, bringing my stop up to within what I imagine is relatively safe trailing distance. I'm not gonna get a bunch of profit into it and let it come back in my face. That's pretty stupid as far as I'm concerned. That's what we want to see. Get that baby down there. There we go. And now, I'll give it some time to think here. I was going to say I'll bring it down to this profit target here. If we get one more push down towards the developing value area low or high, I will do that. And here's our, this is pretty reasonable, yeah. So we're within a couple of points of mean reversion under the developing value area low, which is kind of dicey. Yeah, the target would be that mean reversion, I guess. There we're going. We got for big pools. Well, this is pretty suspicious here. That's a pretty big developing value area high is a pretty big bit of structure to get around down to the mean. But we can always just trail up, so that's what we'll do. And they may have been satisfied with this developing value area high here, and I could well get taken on this move because we've just started the 2 o'clock power hour story. Whether they're going to get the shorts, get these longs and start squeezing them out. That would be great. If we get through this low volume area and below developing value area high, we got a long way to go. I'm a little disappointed they didn't get any more out of here. But they brought it right down to this low volume node. That was my mistake to have this, leave this target positioned as it was, I guess. All right. And there we go. And now, of course, the inevitable will happen. It just took my stop out right there with that volume, and then it'll be a big sell-off. Had I left it here, I wouldn't have been taken out yet, perhaps, anyway. But, okay. So that was a reasonable 5 or 6 point trade. It's not any big numbers, but it's okay. Now, yeah, look at this. This is what's going to be the most disappointing here, is that I second guessed myself right here by 2 ticks, and that's where we're going to fall down. And that was right above here, so that's a really poor on my part. I should have left my trail here. And, likely get a lot more out of this trade. Of course, this is RTM, rear mirror trading, right? But at least it was a live, real trade, and I was in it. So there's my entry, there's my scale. There I start to trail, and there's where we got taken out. Mainly because I didn't think to bring my target above this consolidation area up here to this low volume, which is where I would have been taken. So I would have had another 4 or 5 points on that. Right here, right? And now it gets pretty dicey because this is I was looking for a really serious blow-off top correction. Not this thing. I was looking more for the squeeze, which is pretty early. But we have another hour or 55 minutes. I hope I didn't have this damn thing muted. What I was trying to say here was that there's a lot of stuff coming up this afternoon I've got to do, so I'll be ending the stream right at 3 o'clock, 1500. I hope that all of my discussion there about the trading as a business was on the stream, because I'll be disappointed if it wasn't. I got a feeling that it wasn't, but anyway, we'll see. It's real simple to look at trading as a sustainable, realistic business rather than a video game or gambling is complete adjustment of your thinking. It is a business of statistics and probabilities, not about guessing or I think it's going to go or gambling or whip, quick draw or any of that stuff. The nature of the market is that it's a random environment. The probability of the next trade is always 50-50. And that is an absolute truth. So it's foolish to think that you're going to predict where the market's going. What you have to do is determine a setup and conditions or parameters that have a positive edge, and then take as many, you do that away from the market with whatever backtesting scenario you have, and then your job as a trader in the live market is to take every instance of that setup that presents itself. It's the exact philosophy of the gaming industry from the point of view of casino. They play no games which they have not pre-identified with an edge and specific rules. And their mission on the casino floor is to play that game as many times as they can in 24 hours. And here we go now down, fast developing. So, see what happens when you move your stop too quick. Right now, I'd be heading for target number 2 in the mean reversion. Anyway, they also know that gamblers will win, just like we know that that traders will take stops. When a gambler wins, they don't shoot the dealer. The pit boss doesn't run over and change all the rules. They just congratulate him or not, and then they deal the next hand. Simple. And that's what we have to do as traders. Identify a setup and specific parameters that qualify that setup. And every time it presents itself in the market, take it. And the law of large numbers will manifest the percentage edge to your bank account. The idea of taking as many instances or occurrences as you can is simple. 5% of $1 million is a hell of a lot more than 5% of $1,000. And that's the law of large numbers, simply put. So you need to specifically identify the setup and the rules have to be hard and fast. You can't have a 3-tick stop this time, a 10-tick stop next time, all this different stuff. They have to be the same so that you're comparing apples and apples. Once done, you have a trade that is properly vetted, and then you can trade it. That is trading as a business, and it's not just me, Mark Douglas, Jim Simmons, Dalio, Tudor Jones, Sosnoff, anybody that's a professional trader, not some idiot on the internet or whatever, guru guy, but a real trader, that makes real money. They will all tell you the same thing. It's statistics and probabilities and data. And then when that edge presents, you take it. The idea for me is I'm trying to learn Python to get a good backtesting system so that I can do what-if stuff. What if instead of a 12-tick stop and 12-tick risk-neutral target, I use 14 ticks? What happens if I keep 12 and 12 and instead of 48 tick runner, I have 36 or maybe 24? What does that do to obviously the first percentage you want to determine is to your risk neutral. Then the next one is what happens to your runner or your runners, plural, depending on how you do it. So that is trading as a business, and I know this was recorded. If it's a duplication of the last one, I'm sorry. I just happened to notice after I had finished talking that the mic had been muted, so I'm afraid it didn't go out. And this is a shorter version of what I had said, but at least it's the right, you get the idea. And it's 14:25. We've got a lot of stuff to do right after the close here. I'm going to pick up our daughter, and then we got to take our 2 cats to the vet and blah, blah, blah. So I'll upload the chapters to this stream so that anybody can zip right to where the trade was, which is at 13:45, about 13:46. But the problem is the stream doesn't use the time. Obviously, it uses from the start time, so it's, that would be like 5 hours and something minutes into the stream. So that's why I do the chapter thing. I can't figure it out. And the reason the streams are so long is because I've made a commitment to take no trades off the stream. So if and once or twice when I first started a year or two ago, I would walk in here and see something and then either take it and then have to do this hocus pocus with doing a replay and narrate over it and, put a bunch of disclaimers that this was a replay, blah, 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 which was real stupid, or not take the trade, which is also stupid. So I just start the trade at 8 o'clock. I start the stream at 8 o'clock every morning, and I trade it through and run the stream through to 1500, which is the cash close. And there you are. Now we're getting a little consolidation building up right here around this guy, around this little structure right here. So disappointed in myself for not paying attention to this. This is what lack of focus does for you. Not paying attention to this low volume node here and how the structure changed and letting this target sit down here rather than bringing it into that notch where it would have been taken out. Another 4 points. I mean, so what? But, 10 points is better than 5. What can I tell you? All right, 2:30. I don't really know what to expect, how volatile to expect this thing, but I wish I were still in it. And then that's such a big difference. Once you've been risk neutral scaled and you're just, managing the trade, or trailing up or moving your targets out, such a huge difference. Now we're approaching the 48 tick mark here, right? And had I not moved this to here, even just trailed it to my original scale, I'd still be in the trade. This 48 ticks would be soon approaching and a mean reversion. That would have been a substantial, well, it was from 37 to, 22. Damn near 20 points. Pretty good. Well, not really. 15 points anyway. Instead of now, I've got like 6, I think. So pretty disappointing. Trade management is a real important element. And that's, you can do all of this what if stuff I'm talking about in the live market, but you have to ensure that each group of statistics you capture are with the same parameters. And how many years, if you're 12 years old, maybe you'd be done by the time you're 50, you know what I mean? It's to capture a statistically significant data set of identical context and parameters to see whether you had an edge or not would take forever. I mean, how many days do you think there are? Here we go. So now they're going to get the drop and start hammering the shorts. And there's the mean reversion. And that was my 50 tick profit right there. With no heat and with just stupidity on my, mismanagement, I guess you could say, on my trade management, which is, I suppose, a result of fear and FOMO and whatever else, I guess. I should have left it here or not trailed it at all or only brought it to break even, you know what I mean? There are so many of the last swing high, which is here, would have been safe, of course. That's probably the best approach. And these are the kind of things that you need to work out. Stuff like that, trailing up and stuff like that, I don't know. That's some pretty, I think that would require some pretty advanced coding with what little I've gotten into Python here to do just a few things I've done so far. Pretty daunting for me. But let's say you brought to your swing high, that's right there. So you're still safe, well safe and into it, down to 50 handles, 50 ticks. That's not much of a squeeze for all those longs that were in there. But the market's not over yet either. It's only 1433. So here we go. We're at the mean reversion. There's going to be the market on close orders report at 1450, which usually has some impact or volatility at least. I'm happy that I took a trade, right? But disappointed that I didn't put it back out right away. And secondly, that I mismanaged the trade management portion of it because I would still be in it, right? Just trailing behind the last swing high, be down here now, in theory. And those are the kind of things that really can make a difference. One of the things that is really important that I've recognized over the years, it's almost impossible to be profitable or have a successful, sustainable business with a 1-to-1 risk-reward ratio. Because, you take 2 stops in a row or 3 stops in a row, you got to take 4. You got to win 4 times to be even and up 1. All right, if you've got a greater, you have 2-to-1, 3-to-1 risk-reward ratio on your trades, meaning that you've done the homework and you've identified setups that get a broader stroke, take more, get more meat off the bone, so to speak. Much easier to be, let that law of large numbers manifest and increase the size of your account. That's really important, I think. Risk management has got to be the just about the key. In theory, I mean, if you want to be look at it strictly theoretically, The outcome of the very next trade is 50-50. What does that mean? That means that if you take enough occurrences, you trade enough times, even randomly, just, with a random generator, flip a coin, whatever. If you get enough of those instances, you're going to have a 50-50 win rate, which is more than a hell of a lot of traders. So if you just did that and you took 2 to 1, you double your count. Now, of course, it's not that easy and all those kind of things, but you can that's one way to look at it, and that is not incorrect. That's mathematically correct. And it certainly doesn't, mean that you're going to have 50 losses in a row or 50 wins in a row. And you want to be sure you don't succumb to the gambler's fallacy, which is, okay, I've had 4 losses now. The probability of me losing again is really low, so I'm going to double or triple up. That is absolute fallacy. The outcome of the next trade, spin of the roulette wheel, whatever, is always 50-50. No matter how many reds you had in a past, the outcome, the probability that the next one's going to be black is exactly 50-50. That's real important to get your head around. This is a game this is not a game. If you treat this as a business, it's a business of statistics and probabilities. The most successful hedge fund trading outfit in the world ever is Renaissance Technologies started by Jim Simons. And the fund, Medallion Fund, turned out to be the most lucrative. Averaged 66% returns over 30-something years. Had huge fees and had to lock the door because so many people wanted in. Didn't ever hire one single person from finance. They hired PhDs, mathematicians, people that could do science and were good at it, and knew math and statistics and probabilities. That's how they did it. So, BlackRock, Citadel, they've got thousands of coders and mathematicians and program people. They may have 100 or 200 traders, but they've got an army of math people behind them coming up with the proper strategy, the proper setup and conditions. And they take it to a whole other level with algorithmic trading, of course, but in our world, and you can do it with Excel. You can download all your data, get all your data into an Excel table and slice and dice it the best way you can. I'm trying to be more efficient with it than that. I've done it the old way with Excel, but anything's better than nothing. And 2 minutes to the world famous market on close orders. And here we go. And there they are. Not a big bump. We have taken back a lot of the day. However, that was a pretty healthy sell volume there, but only 127 out. Absorbed like crazy right here. 400, 600, 700 contracts. So in all likelihood, I will have taken one trade today. It's on the stream. And got a whole lot of other stuff to do this afternoon. In a big hurry, of course, as usual. Now, back to the 1-to-1 risk reward ratio. Just, I think it was Tuesday when I just got on tilt and took 3 stops in a row. Just had my head completely up my butt, I guess. Anyway, so that was 3 full stops, which is, 12 ticks or 3 points each. So that was 12 points stop. Now, yesterday, I think it was, or the day before. Yesterday, I guess. I had a nice trade. Today was a okayish trade, risk neutral scale and, trailing stop. Neither of them went to the net. I mismanaged to the point that neither one of them went to the runner or the T2. The one the other day it was a pretty funny trade. I just had to trail up real tight because I had like 5 minutes to go on a school run and leave the building here, so to get my wife. So I just kept trailing up, and I think I got 8 points out of it or something like that, rather than 10. But anyway, that worked out fine. And today was a mismanagement, as we've already seen and talked about. But okay, those 2 trades. Now I'm within striking distance, or a couple hundred. I'm within, I guess, 2 points or something, or a point and a half of erasing those 3 stops from the day before. But that's what can happen to you. It's, 3 steps back and 2 steps forward. That doesn't add up to positive. That's why you've got to take more trades, more well-planned out trades, which have a statistical edge that you've pre-vetted and that get more meat off the bone. Scalping is a romantic idea, but I think in this day and age, that's not the way to make money and have a sustainable business, I don't think. All right, 4 minutes to go time. And will there be a market on close? Market swing trade. That's not market on close. Market closing swing trade. There you go. Oops. And here we go into the close. If they take a big pop, I'll be tempted, but I'm not going to mess with it. Be great to get another fast trade off on the books, but I got too many other things on my mind at the moment. See how the liquidity starts to fill in? Did you see how that's all started to get grayed out? Starting to get thick in the book up over here. Jamming in on both sides of price. And here we go. The closing swing trade will happen now in this 15-minute curb trade area, typically. And there's POC moving. Not sure if that's right at the end or not. Looks like so. Yeah. So that's where my flag will go. And there we are. And there you have it. Now, if they take it up and take it down, there's nothing I can do about it. I'm out of here. Good night. Have a great weekend. And I've got to do a whole bunch of stuff. So the stream will be closing at this point.